Hey, good morning. I It's just Carvana. So anyway, our price target's $46. I know some of you guys are in it. You got to be selling some here at 1950. Like I said, it was next. It had to be next. The stock doesn't want to die. There's a potential for this thing to go to $45. It was a no-brainer at 8. Uh, 8 to 12. That was the zone. You had to wait for it to get through 12. 1250 got you back to 15. We got the pop to 1650, the 2 point pullback, the consolidation. And if anybody's wondering why it's up 4 points right now, who cares why it's up 4 points? It's up 4 points because of math. It's up 4 points because of a stock that goes from 356 to $5. The medium, the mean price is around $48. This stock could legitimately go to 75 before it goes out of business. That's how trades work. That's how the market works. It's based on oversold, overbought, momentum, fear, greed, and VWAP. So the stock got it's a 2-year VWAP break just the other day. That's why we're still loving Carvana. And you know what? Even at 1950, I think the stock's going to $40. So yeah, you have to sell some here. The only way you could sell some right now is you have to short the stock against the calls that we own. All right. So what you're doing right now, again, this is why you should have more than one account. You want to lock into this game because you know it's going to fade at the open, right? So if you're sitting there with those $16 calls, you short the stock right here at 1950, and now you're locked in. You have the calls, you own the stock, but you can't sell a call before the market opens up. So you have to trade the stock. So I would suggest you sell 1950 right here and be happy. And then when the market opens up, you could zero out. You could exercise the call, or quickly cover the short and get out of the call, whatever you want, or you're locked in. You could just hold them both and exercise. It doesn't matter. Once you sell the stock short, you've locked in your gain. I think the stock's going to $46, maybe 190, especially in a market like this where if you haven't realized yet, it's not about the economy. It's not about depressions or recessions or interest rates or any of that stuff. It took me a while also to realize that none of that matters. It's only price, momentum, fear, greed, and VWAP. VWAP's the most important thing because that's tipping you off to the squeezes. That's how you find the Carvana trades and the NNOXs and ENVXs and the CDLX, and when they're going to make those big moves and when they're going to make the moves down. So Carvana, that the just based on math and long-term VWAP levels, I mean, the reason we like the name and the reason we were talking about it for the last, almost a year now, is that it has a shot to get to $33 legitimately. 33 easy. That could actually happen today. And if it was to get through that 33, that's really 32.75. It's absurd what the stock can do because of how high it was once. The algorithms don't know that this is a company that probably will be out of business, that doesn't sell cars, and they're hemorrhaging cash. It doesn't matter. Once it makes the turn, the shorts are forced to cover, the algorithms start to cover, and then that's where the magic comes in. It's all about price. 15 gets you to 1750, 1750 breaks, you go to 20. And then you start kicking into these old resistance zones, which was right there. So 1987, that was your first spot. I thought it would take a little bit longer to get here, but you're right here, 1987. The stock could go today to $24. And if it goes to $24 today, you're on your way to that squeeze I've been talking about where you can get to $33. And you're looking at a stock that I know this sounds stupid, but it's a $46 stock. It's not that big of a deal. It's not like Carvana. What the hell? Why would Carvana go up 100% from here? It's not about Carvana. It's about CVNA going to $46. It's not a real stock. None of this is real. once you accept that none of this is real, right? None of it. None of it's real. None of it's based in reality. The stock market's not based in anything in reality any longer. It's just a casino with numbers. And we have the algorithm that tells us when the best time to buy or sell something is. And the more you've done this over the last, if you've done this for 30 years, you see it. This is the market that I got destroyed on 10 years ago. The market that refused to go down. Yesterday, we saw the signs that it could go down. We actually shorted the market the whole day. It was in, do you know how rare it's been to stay short the entire day? Whoa, we finally got it because we held, once we started selling off, the VWAP levels weren't broken on the way back up. So you had permission from the VWAP to stay short. It's not about what you think. This market is due to go down. Yeah, it's been due to go down for 3 months, but it's gone up. You just go on the internet. Go on the internet, read. When the bearishness is the best, when the bearishness has taken over the narrative, you go the other way. When they started talking about bull markets, coincidentally, the markets has run out of steam a little bit here, right? It's not a coincidence. Is it safe? The worst thing you'll ever see on the internet is it's safe to get back into the market now. That means it's already been safe and it's time to start thinking about getting out of the market. And once again, that commentary is overall the bigger picture, right? That doesn't matter to us. It's about Carvana breaking 1750 today and saying to yourself, you know what? I wish I would have bought it at 14 and 12, but I got to buy it here at 1750 because it's going to 20. And here it is, $20. I won't buy the stock again. I'm waiting for the market to open up and probably go get me some, $25 lotto plays. But the thing is, there are no lotto plays in Carvana because the options are priced for a stock that could go to 120. Look at the price. Look at the option values on Carvana. Look at them. That's a stock that the option market makers, who are the smartest traders on earth because they got to use math and formulas and all kinds of stuff, they're priced, these options are priced for a stock that could go to $120. They are. Just like Rambus. You can't get cheap Rambus options. The stock's priced to go to 250. Carvana, these options are priced to go for the stock to go to $50, maybe 120. But the lotto play was this. All right, I'm dying. My allergies are kicking in. I'll be back at 9:15, but you got to understand, there's 1,000 charts out there that look like Carvana, and all of them are worthless. Like Roku finally broke out, Zoom, Path, basically the whole list I've been giving you for the last 8 months. I don't want to blow my nose in front of you guys. I'll be back later. I'm getting to the emails. We're doing it one by one. It's velvet rope. We're letting people into the chat room one by one. Again, we don't have any automation. This is the way we do it. $20 on Carvana. There you go. 1993. Yeah, $20. There you go. Sorry. $20. By the way, when they announce bankruptcy, that probably will make the stock go to 120, 150. But, right now you're crazy if you're not selling some up here, even though the stock is going to $46. But anything above 1950, and if it closes in the 20s, then it's a no-brainer, man. If this closes in the 20s today, by the way, this stock tends to do well on Thursdays, and then tomorrow might be dead. But again, it could go to $40 right now. Have a great day. See ya.